before any trace is placed, there must be a process. Not intuition, not impulse. A process. Hello folks, this is Stanley, one of the experts from XM Live Education, and in the following video, we're going to be dissecting the Trader's Daily Checklist. The Trader's Daily Checklist, actually, it is taking just a few minutes of preparation, but it defines the quality of your decisions for the entire session. Maybe a setup, maybe even for a market event if you're trading those. First, you would need to review the economic calendar. Know when the high impact of news are being scheduled and which instruments are most likely going to get affected. The goal is not to predict the outcomes, but to control the exposure, adjust the risk, or stay flat when necessary. Let's say you're trading euro dollar and you're planning to execute an intraday position 15 minutes before ECB and CPI. Probably not the smartest things to do, just following blindly your trading system. Maybe if you're trading a market event, you have a better edge when you're doing so. Then you will need to start with the market context and the trading plan for the day. So let's say you have no market events upcoming. You will have to ask yourself first and most important thing: why will I be trading this exact market today? Why I'm trading gold, why I'm not trading the Nasdaq, why I'm trading euro dollar but not let's say dollar Swissy. When you define that, this is probably mostly related to the probability or the edge that you have found it before. You need to ask yourself, do you have a high quality or A+ setup getting printed? Then make sure you set an alert or be at the exact time of a candle close or where the signal triggers. And if none of those things are getting met, if the structure or the price action, all the candlestick configuration, you have not clear signal from a technical indicator, or there is something else from the list that you must constantly find and must constantly create on a daily basis. If something there is missing, it means that you must not trade this particular setup. No clarity means no edge. And as I always say, plan your trade and trade your plan, which ultimately means that if the consequence of market action don't meet your plan, you will have to either not trade it or maybe trade it but reduce the risk and not have your full exposure. Something also very important that you will have to do is perform a mental check. Are you focused? Do you have any distractions? Are you angry or did you sleep well? Is there any emotional or physical fatigue that might lead to execution errors? And when these mental checks get performed and you have all the answers yes, then you could go ahead and trade. If something is missing, let's say you have 3 hours of sleep and drive throughout the whole evening and you're in the beginning of your trading career, you probably would not perform as good as somebody else that have like 20 years of experience. And in that case, again, you probably have to lower the risk. Protecting your capital, including protecting your state of mind. And finally, you will have to reaffirm your execution rules, maybe several times throughout the whole process. Where is your entry? Where is your stop loss? Do you have good enough risk to reward ratio to execute that position? And your stop loss, most importantly, because this is something that kind of guaranteed, it has to be predefined before the entry. When it comes to target, you don't know if the market is going to go into that level. You could only project so. No impulsive adjustments, no emotional decisions, and also you will need to double, even triple check your exposure. Always. The checklist is a filter and it's different to everybody. Make sure you follow it relentlessly and you treat it with discipline, clarity, and control. Exactly how professionals operate. And if you want to get more tips, tune in daily in XM Live Education. Thank you so much. See you in the next one.